we are not trying to sell our stablecoin to bankers or to the financial elite. Our main focus is the last mile, the people in the street, those 5 billion users. That is extremely powerful because these users will be your loyal customers forever because you helped them, you saved them, you gave them a lifeline in the worst moment of their life.
Welcome to CoinDesk Spotlight. I'm Tom Farley, your host, CEO of Bullish, the owner of CoinDesk, and I'm here today with Paolo Ardoino. I've been really excited for this podcast, Paolo, this conversation. I'm a business junkie and just in general, a capitalist junkie, capitalism junkie. And look, by my calculations, you've built the most profitable business ever in the history of the world, likely by many metrics, including profit per employee. So you talk about finding product market fit, absolutely incredible. So I've been looking forward to the conversation here today, learn a little bit more about you, talking a little bit more about Tether, where Tether is going, what your plans are all around the world. Thank you so much for being here.
Thank you very much, Tom, for having me. It's a great pleasure.
For the younger people who are watching this and saying, hey, I want to be like Paolo, I want to be CEO of the most profitable company in the history of the world. Can you give us a little bit of background on yourself personally? You know, where are you from? What were you like as a kid? How were you always interested in technology? Were you always interested in markets? And, voila, you didn't just appear as the CEO. How did you get there? What's your career arc?
Yeah, so I started coding when I was 8 years old. I think software development and coding really was my call. You have kids that are good at art and good in many things. I was very, very bad at art and, expressing myself through, and sort of things like that. So I use coding as a way to create my own words and inviting people inside them. And as my path to creativity, and so that accompanied me throughout all my life. I kept coding, and then went to the Math Applied to Computer Science University. Worked there as a researcher at the university, and then, being Italian, you don't get paid almost at all when you do like some sort of like a researcher job, especially the first year. So I thought to look at where the money was coming from, and that is, I started coding for financial services, and then built my own startup in London. I learned finance through the hard way, in my opinion, and so coding all the complex things around derivatives, spot trading, margin, lending, options, everything that you can think about. So that was my way of really getting deep into the financial world. And then in 2013, I learned about Bitcoin. I was almost love at first sight. And 2014, I met Giancarlo De Vasini, that is the CFO of Bitfinex and Tether. And Bitfinex needed help, and I wanted to actually start a job in Bitcoin. And so I decided to join first as, just a couple hours per day, Bitfinex. And then after a few months was like 10 hours per day, 12 hours per day. So I decided to shut down my startup, give the money back to the investors and really focus on what I love more. I'm also very much an idealist. And so 2014, I started my journey with both Bitfinex and Tether. I became the CTO of Bitfinex in 2016, during and after the hack, basically in 2016. I was tasked to make sure that it wouldn't happen anymore, and the security of Bitfinex would have been the greatest in the world. And secondly, I became the CTO of Tether in 2017. From there, I up to, I would say, 2020, I kept focusing on software development and architecture. And since then, instead, I transitioned more, since 2020, started to transition more on strategy and building products, creating new products and ideas for both the companies, especially when it comes to Tether, I would say that today my main role is actually thinking ahead, like 5, 10 years, what will happen, how the world of tech finance will evolve, how where the world is going on a macro level as well, and how we can build products that will make people, cities, companies, communities, countries more resilient, not just from the financial point of view, but in general from society point of view, technology point of view. And I think that is very, very much needed. I actually, if I can summarize my philosophy around everything, is I think that the technology and finance are built for the best case scenario. Everything works. The world is at, most of the world is at peace. But I think that that might not be true forever, and I think that we should start building things that technology and finance, communication tools, telecommunication tools, AI, built for the worst case scenario, because when we will need the most technology, it's when it will fail us. So that I try to run Tether with this in mind, basically.
Paolo, I had an analogous experience in my career where I started working for a founder, Jeff Sprecher, who founded Intercontinental Exchange. Like you, spent a decade with him. Like you, took on more and more responsibility. There was always kind of a clear split of duties between the two of us. How do you and Giancarlo run Tether? What do you focus on versus what does he focus on? What does that split of duties look like?
Yeah, so Giancarlo is the person that ideated Tether, right? So the entire concept of stablecoins that we have today was born in 2014 because of his idea. So he's actually the genius behind this very great innovation that, of course, today, it's almost a very simple idea, right? So you look at it today is taking blockchain, that was technology that Bitcoin created, and applying the US dollar on top of it, that is and was the most used currency in the world, right? So it's simple but genius. So Giancarlo has founded Tether, and still today really focuses on institutional side of things. Talking to banks, working with big clients. That is at the core of the business, right? But at the same time, on my side, I focus on product strategy. So what is the next product? What is where we should invest in terms of bleeding edge technology? What type of other silos and industries we should look at? For example, artificial intelligence. What products we can build ourselves with Tether, and the products that we build are always going the direction that was mentioned before. Let's build something that can resist to the wrath of God, something that will bring resiliency to people, something that goes alongside with the philosophy of Bitcoin, that is something that is truly unstoppable. And we funded and co-built Kit and Hole Punch, that are communication protocol and a peer-to-peer unstoppable chat and video chat. So this is an example. We invest in Bitcoin mining. We invested in renewable energy production. We have an unstoppable educational arm. We believe that education is paramount and should be accessible to anyone everywhere. So we have all these different initiatives. So it's a bit of Giancarlo, it's a bit of me. We like to work closely together. Sure, everyone focuses, as I said, on two different areas, but at the same time, I think we need to discuss and brainstorm a lot together, because we only sometimes, or most of the time, you don't have the right answer the first try, right? So you want actually to find someone that will challenge your idea and trying to make it better. And that's something that me and Giancarlo are doing very well together and to each other.
You guys are beating the competition pretty badly. Candidly, I don't understand why. Can you tell us why Tether is now 120 billion and all of the other stable coins combined are maybe 1/3 of that. What are you doing right such that your product market fit is working so well?
Well, that is, you said the magic words, product market fit, right? Whenever you create a product that is a spoon, that is, I don't know, a pen, whatever, you have to think of who is going to be your main user. And sometimes, we think that we know it, but actually we didn't do a good research, or actually we are just looking close to us and not really far, far away. One of the interesting things about Tether USDT that might seem a little bit counterintuitive is that USDT works much better outside of the US, right? If you look at the US, right, try to sell a US dollar, digital US dollar, because USDT started as a cryptocurrency, but today is a digital dollar. It's considered the most used digital dollar in the world by more than 350 million people. So whenever you launch a stablecoin, sure, you can try to sell it within a country. And in the case of, a stablecoin based on the US dollar, you could say, the first initial thought would be, oh, well, let's try to sell it in the US, because of course everyone in the US is using the dollar. But the problem is that in the US, you have 15 different transport layers for the US dollar. You have banks, credit cards, debit cards, you have Venmo, PayPal, Cash App, and many others. There is a huge competition. And then on top of that, you will put, your product. It's like, when you go to an Italian, supermarket and you have like 50 different biscuits for the morning, for the breakfast. It's sure. I mean, you can, there can be also yours, but there are a ton of them. Now, also what is happening is that your product, I was seeing that in the US, you have people have 2 bank accounts, they have credit cards, and on top of the credit cards, they can get huge debt. Now I think that the debt on top of credit cards is $1.4 trillion, right? So that offers a feature that in the US is very much appreciated, that is not possible with stablecoins, right? I cannot give you a negative balance on a stablecoin digital wallet or crypto wallet. So also that is, you see, selling USDT to a US person would be like selling an ice bucket to an Eskimo, right? Sure, you can, but he will not need that. But so now you start scratching your head and thinking, okay, but who needs a dollar? And you look around yourself. If you go outside of the US, you'll see that the market is there, is a huge market, is composed by 5 billion people that are living in high inflation countries. And 3 billion out of them, they don't have even a bank account. Not because they are bad people, they're called unbanked. Not because they are bad people, just they are too poor of being of interest of the banking system, right? The banking system, in order to keep an account open in a bank, you would need between $50 and $150 per year. If you live in Haiti, where the average salary is $1.34 per day, or a salary in Africa is $60 per month, how the hell you can keep a bank account open, right, and be part of the global banking system? That is almost impossible. So I was recently in Turkey, where the Turkish lira lost 80% of its value against the US dollar. I know that in Argentina, the Argentina peso lost 98% of its value against the dollar. So all these people, and these countries, especially in the emerging markets, developing countries, the populations are young. So they looked first at cryptocurrencies, but especially during, starting from 2020 with the pandemic and these national currencies, and it's a common story. Again, 5 billion people have the very same problem. All these national currencies started to go down the bin, and all these people, all these communities started looking around themselves, trying to find a solution, not to speculate, not to buy Dogecoin, not to buy Shiba Inu and all these crazy things, but actually they wanted just to protect themselves. So before USDT, they would go in a dark alley in some streets and in the black market and buy some US dollars. with a 10-15% spread. But with new regulations starting actually from emerging markets, new local exchanges were able to rise in developing countries. And so now people can connect their bank account or credit cards, or just go with cash and buy Bitcoin, for example, on some.
Well, let me interject two related questions, if you can weave them in. One, you've talked a lot about emerging markets. Is that happening on Tron disproportionately? Because one thing I don't understand is when I look at USDT, more than half, or around about half, might even be more than half, is on Tron. And so I'm wondering, is there a connection to what you're talking about here in terms of emerging markets? And I'll leave it there with that question.
Yeah, I mean, look, related to what I was saying, again, these markets, they cannot afford to pay $5-6 per transaction on Ethereum or on some other chain. They have been using Tron since 2018, just because the cost of transaction is fairly small. It's like 10-15 cents, and the confirmation time is like 2 cents. Right. So again, imagine like someone living in Haiti that needs to pay $1 earns $1.34 per day. How they can pay $5 for transaction fees? So all these emerging markets have. Go ahead. Sorry.
Let me another related question. What you're laying out is something that I wholeheartedly agree and believe in. Like when I think of crypto, people talk about, well, what are the use cases that are going to work? What are the use cases that are going to work? Well, Bitcoin works and stablecoins work. Proven. It's proven. And largely you've proven it. And that's how you've built this amazing business. What you're describing is one of the use cases that's driving stablecoin adoption all around the world. And I think it's an important story. And I think you can go on, and I could go on, that not only is it important because you're allowing these people opportunity, but also you're taking those funds and you're investing them back into US Treasuries, which is helpful for the US and helpful for Americans. And so that in and of itself is a good thing. But why USDT and not a competing stablecoin? Is there something you're doing that other stablecoins aren't? Do you understand what I'm asking? As opposed to just why does the use case exist? Why are you winning?
We are not trying to sell our stablecoin to bankers or to the financial elite. Our main focus is the last mile, the people in the street, those 5 billion users. So that is extremely powerful, because these users will be your loyal customers forever, because you helped them, you saved them, you gave them a lifeline in the worst moment of their life. You give them the optionality to opt out from their national currency, and giving them a solution to start for the first time in their lives to having a saving account, right? I live in part of my life in Switzerland. I mean, you are in US, but these two countries, they don't need stable coins. They have hundreds of ways to buy treasuries. They buy stocks, savings. They have the best offerings in the world. But to put yourself in the shoes of someone that doesn't save money, putting cash under their pillow. So for the first time in history, we gave them everything that they didn't have. And so that's why they are our closed users, because the closest customers, because they really are, they see ourselves as a way out from a broken financial system, not because they studied Bitcoin, not because they wanted decentralized money. That doesn't matter at all to them. They just want a digital dollar because that's what they knew before. They were buying cash dollars somewhere in a dark alley, in their cities. Now they can hold those dollars on their mobile smartphone, and that's a game changer. So we are not doing something special. It's the others. They don't understand the product market fit. They don't understand this market. They just go to to another banker trying to convince them to use USD, our competitor stable coins to settle some transaction across different banks. But that's meaningless. That's you don't need a stable coin to replace SWIFT for interbanking settlement. That there is no point there.
Usually assets evolve from curiosity to acceptable as a store of an asset to store of value to a more stable store of value to ultimately a form of payment. To what extent, what you're describing is largely store value. In other words, I'm living in Argentina. I have a bunch of crappy pesos, and I want to hold dollars because that's my retirement savings, or that's my child's education fund, or the money to put food on the table. So I'm going to buy dollars, and now it's a store of value. To what extent are you also seeing USDT around the world be used in these emerging markets all day, every day, to pay for taxis, pay for water, pay for milk, pay, as a form of payment? Or is that not yet happening?
Actually, it's very much happening, right? So I was in Istanbul a few days ago, and it's happening, right? People are paying in USDT almost everywhere in the city, and you'll go in Buenos Aires, same story. You can pay a taxi driver, you can pay for groceries, you can pay for a haircut, you can pay for anything in USDT, right? For them is the digital dollar. And again, they don't need to have to know the complexities behind the technology of blockchain. Doesn't matter. So, but
what mechanism are they using? What mechanism are they using to do it? Are they using a local exchange or a local electronic broker who has some handheld, mobile technology?
Yeah, I mean, they're using different solutions. The most sophisticated, they're using like wallets on their smartphone, possibly non-custodial wallets. Others are using some, local exchanges, and others are using, like, for example, Binance, and using that as their bank, right? So there are different solutions based on your educational level in terms of tech and pension risk.
Before I move on, just to come back to what I see as a primary benefit as an American who happens to be sitting in Washington, D.C. today. Am I right that the incremental money that you're bringing in, you're by and large investing all of it or substantially all of it back into U.S. Treasuries? So
in these days, we are about to pass the 100 billion U.S. Treasuries mark that we hold. One of the most interesting aspects is that not only USDT and Tether created the most used, or one of the probably two most used dollars in the world. One is through the traditional means, and the other one is USDT, right? Used by 350 million people, probably more, but let's say conservatively. But second, also, we decentralized the ownership of US debt. So before, like we have seen China that 2-3 years ago had $2 trillion of US treasuries, and now they have less than 800 billion, right? They have been selling like crazy. And so, one person or one small group of person in China decides to sell the T-bills. But when it comes to USDT, now every person in Argentina that buys $1 worth of USDT, we take that purchase and we buy US treasuries. So now 350 million people are holding US treasuries. So we added resiliency to the ownership of the US dollar. So now you don't have one single country, one single decision maker that can sell billions and hundreds of billions of T-bills at once. We have the decision is split among 350 million people. That is unprecedented. That is something that will prove and is proving that blockchain technology and stablecoins can actually be the best friends, and USDT and Tether are the best friends for the US dollar hegemony. No one came close to what we are doing in that sense.
Paolo, with great success and $6 billion of profit on dozens of employees is great success. Comes considerable scrutiny. And, it continues for Tether, and people come out of the woodwork with legitimate concerns that you can address, and with some crazy ass conspiracy theories. And they kind of fall into two flavors. One is the flip side of the coin of emerging market use and really providing opportunity is the potential for underworld figures, I'll call it, to be able to use USDT to fund operations. And so if you could comment on that, it would be helpful. And then the second, is this broader kind of conspiracy of hey, Tether is the entire thing is illusory. It's a scam. It's a fraud, or whatever bad word you can think of, which comes from which to me, the substantive part of the conspiracy is just, how are you going to grow in the world? How are you going to become more compliant, more transparent? Where are you with respect to regulations and audits and all that kind of stuff? So if you could comment just on those two that seem to pop up in the press from time to time, and give us your thoughts on that.
Sure, thank you. And also thank you for the opportunity, because actually I love to talk about these two topics because they are very important and very little understood. So first of all, let's talk about illicit activity and how we can flag that and ensure that does not happen, or reduce the usage of that. So with at Tether, we work with more than 140 law enforcement agencies around the world, across 40 different countries or more, more than 40 different countries. So name one single bank that works with 140 law enforcement agencies across 40 countries. It is impossible to say that, because try to imagine that you are a law enforcement agency and you have to investigate a wire linked to illicit activity. And that wire went internationally across 2-3 jurisdictions. Good luck in having a court order and going to the first jurisdiction and then to the second and then to the third. The money disappeared already. With blockchain technology, we are very precise, right? We are very granular. Everything happens on chain. So we work with law enforcement with chain analysis and other partners with the best tools for ecosystem monitoring. We use KYT. We built over 10 years the best in class technology to be helpful to law enforcement. We onboarded on Tether the FBI and United States Secret Services. So we helped US law enforcement to freeze around $600 million. Plus in total, we froze around 1.5 billion. And most of it, I would say a good part of it is not money laundering, is not terrorism finance, is actually hacks. How many exchange hacks, how many DeFi protocol hacks. And the beauty of it, not only we are infinitely more effective than any bank in the world or any financial institution in the world, we can also help with the restitution much faster. We can, work with law enforcement to give the money back to the legitimate owners in a way that, again, is unprecedented. So we oblige to sanctions. So whenever something is put on the OFAC SDN list, we follow that. We are very, very public about it. Bottom line, and I said it multiple times, any criminal that is using USDT for illicit activity is a very stupid criminal, because he will be caught.
You understand this only 1,000 times better than I do. If somebody's dealing in dollars and they want $100 million transferred to them, then eventually it's going to connect back to some bank that's regulated by the US, and the US is going to do some sort of know your customer. Whereas with respect to stablecoins, it can be transacted out on an exchange, and if that exchange either doesn't have know your customer, strong know your customer processes, or that customer ultimately, withdraws from the exchange and then transacts with somebody that doesn't have KYC, it can end up in the hands of whatever, the Russian government, sanctioned Russian government. And so perhaps it's easier to end up in those hands, but then once it's in those hands, you can certainly track the account. You can look on a public blockchain. Is that just a necessary cost of business? In other words, we talked a lot about the opportunity you're providing in the emerging markets. We talked about the benefit you're providing to U.S. society by buying those treasury bills back. Is it just a necessary cost that, yes, there may ultimately be some criminal activity, but eventually those people will be caught and their funds can be frozen, but it's not going to be a foolproof system 100% of the time? Is that the way to think about it?
The issue is actually in the, look at the US dollar, right? So how I was reading a report from Nasdaq, I think, recently that said openly that I think was Nasdaq, but there are so many reports proving that the US dollar itself, within the banking system itself, with the traditional financial rails, is actually the instrument for money laundering an infinite amount of times more than the entire crypto industry, right? And so again, why someone should use something like USDT that has the ability in a very capillary way to freeze it immediately, right? So you see, like if you are on Twitter, you go on Well Alert, and periodically you see like Tether froze this, Tether froze that. There is we are working with 140 law enforcement agencies in 40 countries. So it's much easier and much more protecting to use traditional financial system to do bad things, because I mean, look at all the banks that were fined because they were laundering money for drug lords. I mean, is crazy. It doesn't make any sense for anyone doing illicit activity to use USDT. And I think also look at also even Bitcoin, right? So when Bitfinex was hacked in 2016, it took 6 years, but we were able to track the perpetrators with law enforcement, and they were caught, and our Bitcoins now are in the hands of the DOJ. So that is a story of compliance and usage of the tools. Thank you.
Congratulations.
I think I think should be very obvious that there is no comparison between the tools that we have for compliance and what the banks have. The banks are incredibly outdated when it comes to compliance and being effective, in my opinion.
Questions that I'll hear from the skeptics are number one, why does Tether not have a full audit? As I will point out to people, you put out a very helpful and fulsome quarterly attestation report from the auditors, but why not a full audit? And a second question, why not hold all of your reserves in U.S. Treasuries and just put to bed these comments about holding Chinese municipal bonds or what have you?
When it comes to full audits, I've been pretty vocal about the fact that I think Senator Warren wasn't necessarily helpful in the past, saying that Big Four auditing firms should not take on more new stablecoin clients and new crypto clients in general. But also, I'm not aware of our competitors having or publishing a periodic audit of their reserves for their stable coins. So our quarterly attestation is made by BDO, that is one of the top auditing firms in the world. It's very detailed. I think is much longer than the other attestations that the others put out. Is also shows that the fact that the auditor goes very in depth into our research with also independent confirmations from all the different partners and parties. So we're very proud.
Let me interrupt just to say I have a view on this as well. And for anyone who's listening to this and says, convenient that Paolo says, it's hard to get an audit firm. They're hiding something. What I can say is you are 100% correct. The audit firms are under tremendous pressure not to not take on additional crypto firms. In addition, when they do take on a new crypto firm or they issue a new report, their overseer, the PCAOB, often will pull that report and say, hey, we need to do an inspection and we need to discuss it with you. So there is an anti-crypto bias for sure among the big four that I'm aware of. Please continue.
Yeah, thank you for that. And I think was part of the Operation Choke Point 2.0. Make it very impossible for crypto companies to get anywhere nearby traditional finance and traditional rails for even auditing, compliance, and so on. But I think that hopefully that will change in the future. I'm possibly optimistic. But the other thing that I think only us have is the custodian, right? There is a person called Howard Lutnick. CEO of chairman of Cantor Fitzgerald. In two occasions, this year was in Davos, 2024, and Bloomberg TV, I think he went very publicly saying, Tether has the money. So for important words. Bitcoin 2024, Nashville this year, went on publicly saying again, some people are very much scrutinizing Tether. They are asking Tether, where is the money? And he said again, I have their T-bills. I see their money. I went and did 2 years of due diligence and turned every single rock. That is like having Larry Fink going publicly and saying the very thing about one of their funds, right? So that is unprecedented. That shows that, we not only have the attestations, even the custodian very publicly, and his reputation is incredible, right? You should just Google him.
Paolo, I agree. I know Howard well. Do you hold substantially all of your treasuries and repos and money markets with Cantor?
Yes.
So Howard presumably has perfect line of sight to, what is that? Roughly 100 billion of your 118.
Yes, and
round numbers.
Again, he said it so publicly, right? So he really, he started doing due diligence for 2 years, because he wanted to make sure that before onboarding us, he could see it. Well, his company could, understand all the different.
I can hear in your voice almost shock or surprise that Howard coming out and saying that didn't have more of an impact. Paolo, I think it did have a big impact, actually. For whatever reason, and look, a part of it is probably because you're so successful. For whatever reason, people love to believe this narrative that, there's nothing behind the curtain and it's going to be some big collapse. I do think Howard coming out pierced that veil significally. There's always going to be naysayers, but Howard coming out saying, "Hey, I see it." But why not hold all of it in T-bills? You have this other 10 billion that you put out, and I look at it every quarter. We're holders of Tether, significant holders of Tether, as you know, at Bullish, and I look at it every quarter. And you've got that other 10 billion that's in the other category or the investments category. Why not just turn that all into T-bills? Or at a minimum, why not just line item by line item say, here's exactly what that 10 billion is, as opposed to letting people look at it and go, ooh, other, and it must be worst case scenario.
Well, actually, we are quite open about it, right? Because we have Bitcoin and we have gold. So those are making the bulk of the rest. That is another very important point, right? And where our Bitcoin address is very, very public nowadays, and so they can see that we accrued a substantial amount of Bitcoins, and same gold has been part of the attestations process. So now, why not everything in T-bills, right? So a few years ago, people were accusing us of having 70% of our funds in Chinese commercial papers. That was completely untrue. We had a very, very tiny amount of Chinese commercial papers. The vast majority was still Western, highly graded, like AA, AAA commercial papers. And actually, with the FOIL Act in New York, that came out. In fact, like all the craziness of what we were accused of, was almost dead because people understood that we were correct. Think about that. Last year, 3 banks, Silicon Valley Bank, Silvergate, and Signature, went belly up because they were holding like US-based long maturity municipality bonds. So in the end, we were accused by the financial system to take risk, and then the financial system itself went belly up because of them taking risks that they were accusing us of. And by the way, Silicon Valley Bank, going belly up, that bank had $3.3 billion of uninsured cash of our main competitor, almost killing this main competitor. And again, we were, imagine all the things that we were accused of, and in the end, compared to them and compared to their poor risk management, instead, if you remember 2022, we were subject to other. huge pressure. We redeemed $7 billion that were 10% of our reserves in 2 days, in 48 hours, and $20 billion that were like 25% of our reserves in less than 30 days. So it's trial by fire. And again, we have Hunter, we have Howard, that, by the way, I very much respect, and I think he made a huge change. Second, we have the attestation, the quarterly attestation made by the super reputable firm. We have the trial by fire. We have all the competitors blew up, like, not talk about Terra Luna, but, our main competitor just last year. So it's at this point, I mean, who believes in these conspiracy theories, I mean, should get out from the basement of their mothers. Sorry to say that.
No, well said. I can sense your frustration. And one last question. MiCA stablecoin legislation, to me, it still isn't fully formed and it's going to be evolving. You are not yet MiCA approved. Is that something you're actively seeking? Are you waiting? Or have you looked at it and said, no, it makes no sense and we're out?
So I've been actually very vocal since the beginning of this year on MiCA for stablecoins. I think MiCA is it's bringing and creating a lot of risks, not only for stablecoins, but also for banks in Europe. So one of the requirements for MiCA, for stablecoins and big stablecoins like USDT would be keeping 60% of reserves in uninsured cash deposits among multiple banks, not just one, but among multiple banks, around 5. Right now, let's think about this scenario. Like, you are a stablecoin and you have 10 billion euros under management. 6% of that has to go in uninsured cash deposits in multiple banks, right? Let's say even one bank. Let's keep it simple. So we also know, so 6 billion are in uninsured cash deposits. Now, we know that banks can lend out up to 90%. So it means that 5.4 billion euros can be lent out from the bank where you deposited. And 600 million will be kept in the bank balance sheet. Now, you are a stablecoin. The most important thing, the most sacrosanct thing you have to do is to give back the money when people ask you, exactly as we did in 2022. So now imagine that someone comes to you and asks you for $2 billion euros. Now you go to the bank, and the bank has only 600 million euros, and then the bank becomes insolvent because you ask them $2 billion and they only have 600 million. Because they lend out the rest to, merchants, to, people that want to build, to buy a house or start a business. So that is very dangerous for stablecoins, and it's very dangerous for the banks themselves. So it's adding a systemic risk that might be unprecedented. I think is something that stablecoin issuers should be really look at in detail. So that's why we have been discussing with the European regulators since 3 years on these points, and so I'm very appreciative of regulations when they are improving or reducing the risks and improving the safety for the consumers. But in this case, I don't think it's actually improving the safety for the users. It's actually creating a systemic risk. So I'm very careful, and I've been very vocal, and Tether has been very vocal.
So, Paolo, I want to thank you. I have a few remarks before we sign off. First, I want to reiterate, we're an 8-figure or 9-figure holder of USDT. We know your firm well. We appreciate everything you're doing in the world. As an American, I think the fact that you're effectively exporting the dollar all around the world, including to people who need it most, in banana republics or lousy regimes where the value of their currency is declining dramatically, they're able to effectively and easily and relatively cheaply dollarize, in large part because what you've created. I also appreciate that you came on and you took the tough questions. You guys have gone in just the last few months, I want to say 90 billion to 120 billion in 6 months, something like that. I think that's back to March, 90 to 120. Yeah, 8 months. So an incredibly important part of the global economy. And so answering the tough questions is part of it. I have a little bit of envy, 6 billion of profit. and admire the heck out of what you all have built. And so I just want to say thanks again for being a partner to Bullish, but coming on and sharing your thoughts and some of your growth plans, and just being here with us today.
Thank you very much, Tom. As always, a pleasure to talk to you. And thank you for your business as Bullish. We speak soon. Thank you for having me again.